You're watching the Daily Market Comment by Rafi Boyajan. I'm Maria Bashardis. Thanks for joining us at XM.com. UK Prime Minister Boris Johnson used his post-election Queen's speech yesterday to unveil his Brexit agenda and reintroduce the withdrawal agreement bill to Parliament with some changes. The revised bill has all the indications of a hard Brexit, as the Prime Minister removed sections on the protection of workers' rights, signaling divergence from EU rules, and on giving Parliament a say in the negotiations on the future relationship with the EU. Lawmakers are expected to begin voting at 14:30 GMT, and the bill could complete its legislative journey through Parliament by the middle of next month, before the January 31st deadline. But while this is likely to offer some relief to the markets, investors were nevertheless unnerved by the latest developments, as it brings Brexit a step closer to reality. It also increases the likelihood of a looser post-Brexit relationship with the EU than what the markets would have wished for. The pound extended its weekly slide to more than 2% yesterday. A not-so-dovish Bank of England was unable to provide much support to the battered pound, as an unexpected slump in November retail sales kept the door wide open for a rate cut in 2020. Elsewhere in the markets, the mood was a bit more sanguine, as investors looked forward to being greeted by a U.S.-China trade deal in the new year. U.S. Treasury Secretary Steven Mnuchin told reporters on Thursday that the preliminary agreement was completely finished, adding, "We'll sign the agreement in the beginning of January." U.S. stocks cheered the prospect of an imminent conclusion to the Phase 1 deal, with all three major indices on Wall Street closing at yet another record high. However, renewed Brexit jitters threatened to spoil the party, and Johnson's hardline stance drove up demand for safe havens on Thursday. The dollar was little changed on Friday as investors awaited the last batch of major data to come out of the United States in 2019. Personal income and spending numbers due at 1500 GMT will be watched for clues as to whether consumption can continue to support U.S. growth. This was today's Daily Market Comment. Thanks for watching at XM.com.